This was the week of Nvidia. This was the FOMC week. This was Apple's week, Microsoft's week, Tesla or Cybertruck week. This was the week. Actually, the day that I'm recording this is the fourth year, or 4 years ago, something very dramatic happened. Do you want to hear the summary, a weekly summary of all the stock market news or the main stock market news? And at the end, let's talk about the fourth year that should be mentioned. Are you ready for it? Let's go. Hi everyone and welcome back to the channel. If you're new to this channel, my name is Micha Stocks, and on this channel we upload a video every week summarizing what happened in the markets in the week before and what is going to happen the week ahead. This is our channel. Currently 2.98k subscribers. If you're new, it would be amazing if you can subscribe to the channel. If you'll enjoy at the end of the summary, please subscribe or consider subscribing. Let's dive in. These are the major averages. The Nasdaq, another almost 3%, another all-time high this week on a Thursday. S&P, another 2.29%, bringing the S&P gain year-to-date to 10%. Another all-time high on Thursday. Dow, another 2%, and the Russell, another 1.3%. All of this was due to the FOMC decisions, as you can see, Wednesday, turning everything up. We're going to talk about that when we get to the news. Diving into the different indices, you can see the communication, discretionary industrials are leading the pack. And on the negative side, we can see real estate. Although it shouldn't perform that bad with the rates coming down, maybe there's a bigger fear than we know around the real estate. We will see that uncovering probably in the next few weeks to better understand why is it on the red side. Crypto market saw a negative week, second negative week in a row, and we will see that it's mainly because of outflows that happened this week from GBTC, the biggest Bitcoin holder currently in the ETF landscape. And currently the outflows overcame the inflows, at least in very short term. Going back to commodities, crude oil almost on inch this week, and natural gas down 1.38. That brings us to the Magnificent Seven. Nvidia leading the pack after an amazing 3 days, which I'm going to talk to you about because you probably haven't heard about that before. 7.3%, Google up 6.7%, Meta up 5.2%, Tesla up, even Tesla up 4.4% on a week, Microsoft and Amazon as well, and Apple with the bad news that they had this week, still unching the week, zero gain for Apple. Heat map, most green, less red. As you know, the big rectangles are usually the impact on the S&P 500, and Microsoft, Google, Nvidia, Meta are the biggest influencers, and Apple, of course, as well. And that will brings us to the news of the week. My news are not going to be number one. I put Jerome Powell and the Fed being number one news. So in this week, Jerome Powell and the Fed updated the market that they are not going to raise rates. That wasn't a surprise. But what actually wasn't a surprise, but what aligned the market to the Fed expectations was the fact that the Fed said, at least in the dot plot, which is their way of articulating how they think, that they are going to reduce rates at least 3 times during 2024. And that's why the market rallied. Because basically the market understands that the rates have peaked, and now we're probably going to start, instead of an increasing rate cycle, a decreasing rate cycle, and that will provide liquidity, that will provide more oxygen to the companies that are leveraged, and that is, of course, a good sign. What it also aligned the Fed, and you can see Charlie Bilello summarizing it very well, to where the market is. It aligned the Fed versus the December forecast to the following. First of all, they increased their GDP, meaning that the economy is strong. They actually lowered their unemployment expectations, meaning that the labor market is strong and they're not fighting it. And also they increased their core PC inflation expectations, meaning that they understand that there will still be inflation, maybe higher than the 2% that they expected, but they're not going to fight it Why do we know that they're not going to fight it? Because they said that they still anticipate 3 rate cuts, meaning that it is dovish. And why is that relevant? Because it aligned the Fed and the market to the same viewpoint. Now, the market sniffed that out 6 months ago. That's why we saw the rally. What we saw after that is that the Fed right now is aligning itself to the market rather than the market aligning themselves to the Fed. Very interesting situation, and very interesting how everything folded as it should. And there are still Fed members that think otherwise. For example, Fed Bostic still anticipate only 1 rate cut this year. Maybe he's right, and maybe the rate cut won't happen so fast, and maybe there will be only 1 rate cut. It doesn't really matter. Once the rate cuts will start, that ship will sail, and there will not be a way to turning that ship back. At least that's what I think. Nvidia Conference, the GTC, was held 3 days this week. This is me with Jensen Huang, the Nvidia CEO. I spent a lot of time talking to very, very high executives at Nvidia, understanding the business cycle. And I can tell you, almost certain that I was in the future for three days. 3 days, I understood how the future is going to go. On my Hebrew channel, I spent a lot of time explaining what the future. Here, I'm going to spend a few more minutes just for you to better understand. Yes, I also have a Hebrew channel for anyone that just stumbled upon this video and said, what? You also have a video? Yes, I also have a Hebrew channel. Look, Nvidia articulated in their own way, and let's look at the pillars that they've saw and presented, that we are now in a new industrial revolution. Again, from the Nvidia point of view, but it can really explain to us where the technology world is going. They have identified that most, if not all, the computers, personal and data centers, are going to go through a huge forklift. All the data centers in the next few years, are going to be replaced. Computers are going to be replaced. All of them are going to have generative AI capabilities. Whether they're going to buy it from Nvidia or from someone else, it doesn't really matter. It's a $100 trillion market. A $100 trillion market is a market that a lot of companies, tens and tens, maybe even hundreds of companies, will enjoy the impact. So that's one. Second, and of course, the generative AI, and we're going to talk about that maybe later in the 5th pillar, is going to enable a lot of industries to excel, to reshape themselves in a very, very dramatic way. They also launched their new Blackwell platform. It's a new chip that's 100% faster in the way it accelerates calculations. It's better than anything that they've produced before. The orders are beyond expectation, and of course the price wouldn't be cheap. What it does mean is that Nvidia is pushing the boundaries on accelerated computing. And why is that relevant? Because on the CPU side, where computer needs to run very, very fast calculations, Nvidia is in the forefront of that. There's also AMD and other companies, but this again was Nvidia Conference. Then the third pillar that they presented was their NIM. NIM is their ability to basically package the relationship between a model and the way it's deployed at different companies. I'll give you an example. Let's say you're running a text-to-image model. You can now engage as a company. You can now engage with the producer of the model. You can make sure that you have the right security, you have the right versions, you have everything working. And also now you need to make sure that your CPU and GPU and your data center knows how to work with this company. Instead of that, Nvidia decided that they're going to be kind of the medium ground between. They're going to make sure that they're always in the NIM going to have the latest and decide, the latest and greatest. They're also going to have all the security, everything that is needed. And you as a consumer or as a company, startup, whatever, will always have the latest and greatest. What it does produce for them is new revenue stream. And for anyone that is using different kind of models, it will make everything a lot easier. Will it work for Nvidia? Every $1 billion is new $1 billion that they didn't have before, so probably yes. The other thing that they're going to work on is creating that foundry, those models, more and more models to connect between companies that, as I just articulated. And the last thing, which actually doesn't fit to the way we think of Nvidia, is their Omniverse and their Isaac robotics. I'll start with the Omniverse. On the Omniverse side, Nvidia identified that there are industries usually let's call them the industrial industries that haven't enjoyed all the gains that technology provided or all the AI has provided. What Nvidia saw through generative AI, the ability for the computer to generate new and new capabilities, is that they can run simulation. Simulation not only on the computer side, but also for industrials. For example, for a shipping company, right? Like Siemens, they showed how they can help Siemens employee identify problems in building ships. They can do the same thing on infrastructure, on buildings, on creating data centers, on a lot of things through the Omniverse. The Omniverse is the ability to simulate things that haven't been done before, that haven't been produced before. They have a digital twins. It's the ability to simulate let's say your industry in the computer, and through generative AI and through very, very fast computing, you will be able to simulate things that you weren't able to do before, whether it's medicine. I don't know, so all these trials that can run in a computer, running simulation. And that brings us, of course, to autonomous driving. What is autonomous driving? It's teaching a computer to see through videos, just like we learned how to drive. Omniverse, and through that, the Isaac robotics, will enable cars to drive themselves. It's going to take years. Companies will need to have their software on top of it, but Nvidia is laying down the foundations for a lot of companies to create, let's call it, self-driving cars. Through self-driving cars, what is a car? A car is a robot on 4 wheels. Pick it up 90 degrees, and now you have a robot. If you have a robot, you can have a robot do tasks that you just need to train that robot to do. Nvidia now is using their capabilities, their hardware and software, to have a layer inside robots that will know to capture inputs and to know how to run generative AI to produce outcomes. Those are the amazing things that Nvidia launched. Of course, Nvidia stock is on its way, or Nvidia wants to be the biggest company in the world. Whether this launch or this week would be another step toward that, or will there be a disappointment? We will see that in the next, of course, few months. But I tried to summarize. Hope it was clear for anyone. And I'll put some links in the description below for an interview Jim Cramer held with Jensen Huang in the conference itself. And so you can stay updated, and you have to stay updated because everything is going to change. This might be the biggest revolution of our time, the industrial revolution of our time, which would be the generative AI revolution. And if that's the case, whether it's NVIDIA or the technology area or anything that is related to that, we're going to see a generational wealth opportunity, and don't miss it. And just a quick reminder, this is not financial advice. This is all educational and for entertainment and education purpose only. Let's continue. Apple didn't have a good week with the DOJ filing a lawsuit against them, an antitrust lawsuit saying that the iPhone maker has a monopoly over the phone market that is hurting consumers, developers, and rival companies. And that's the US. In Europe, both Apple and Google are hit with the first probe under the new European Union digital law. So are they going to split up Apple, Google, and others? Might be in the future. We don't know yet. Microsoft, on the other side, had very exciting news on the AI front. One of the pieces of news that the new laptops, Surfaces, came with Copilot installed, which means that if you now buy a computer, you have faster ability to access the capabilities of smart generative AI and AI capabilities based on OpenAI and other capabilities. You will see it in a second. Intel is the one producing the chips to run these hardware. Also on the Apple and Google front, we heard at least at the beginning of the week, that Apple and Google are working together in order to enable Gemini inside Apple phones. As you know, the default search for Apple phones is Google. Google wants to make sure that they don't lose that contract. They're going to pay a lot of money for Apple to install Gemini as part of the search capabilities inside the phone. Reddit had their IPO this week and the stock went up 70%. Tickers are DDT. After 19 years that they waited to launch the IPO, cannabis stocks got a bid this week after both Germany and US are progressing into maybe legalizing cannabis. This might happen in April Fool's. It's not an April Fool's joke. It might happen April 1st. And that, of course, moved those stocks. The ETF that follows is at MSOS. You can follow that ETF for that. Tesla trimmed their output in China after a report on slower EV sales growth. Intel had a great week, getting $8.5 billion grant from the US government to build a chip chip factory in parallel to Taiwan Semi. We will need as many factories as possible on the chip front, and Intel is going to enjoy that, being a chip producer. Chipotle announced a 50-to-1 stock split. I haven't heard a 50-to-1 stock split in a while. That's because their stock didn't do a stock split when it was in the hundreds and not when they were in the low thousands. Now they have to do a 50-to-1 stock split. Tesla and Cybertruck, or Tesla actually produced 1K Cybertrucks with 4680 cells. Mustafa Suleyman joined Microsoft as the CEO of Microsoft AI. Microsoft is going all in on the AI. Mustafa Suleyman, if the name rings a bell, that is true. He led DeepMind, the company that is the foundational AI for Google that Google acquired. Then he started Infection AI. Now he's going to leave his role as the CEO of Infection AI and go back to Microsoft. He's building a huge AI team at Microsoft to try to conquer that market. Microsoft being a very dominant force in AI. Standard Chartered says that they see Bitcoin rallying to 150,000. What? They're not blinking with the current sell-off of the Bitcoin. They see 150,000, and in 2025, 250. I'm not complaining if it will get to that point. I'm just saying that I hope that it will. Nothing more to say about that. And that is all the weekly news. Let's talk about what is going to move the market in the next week. I want to start with a chart that we haven't seen in a long time, and this is the AAII sentiment vote. AAII, institutional and home offices survey, where they survey their sentiment. You can take a look and see something very interesting. It's hard to identify, so I'll break it down and focus you. First of all, let me give a quick explanation what you're seeing. The red bar shows the sentiment, the percentage of sentiment that is bullish, gray neutral, and red bearish. Easy. In the last 4 weeks, you can see that the sentiment has become a lot more bearish, from 21.3 or 0.9 to 27, while the bullish side went down from 46 to 43. So not only did the bullish side go down, neutral went down, and all of it went to the bearish side. Why is that important? Because there's no reason for that. The market is going up. So are they foreseeing the future, or are they trying to insist that the market should correct itself, the market should go down, and maybe they've missed the boat? I don't know, but this survey is very, very interesting, especially when we look at the fear and greed, which we're not even in extreme greed anymore. We're just in the regular greed. Not saying it's high, it's not high, it's high. But we're at greed, not even at extreme greed. So something will happen in the market at the fact that there are $6 trillion on the sideline in money market funds, which haven't entered the market, in a market that keeps rallying. S&P 500, year to date, 10% up. 10%. That's the average. That's the 30-year average for the S&P. It did it in 3 months. In theory, people can sell their portfolio, putting aside the tax, of course, implication. Sell their portfolio. They did their gains for this year, and that's it. After 7 years, they'll multiply that portfolio. That's how crazy things are between, let's call it, the people that read the market and play the market as it is, and others that are trying not even to time the market, that are trying to educate the market, that are trying to shout at the market saying, oh, you should go down. Well, it's not going down. Why are you shouting at the market? Calendar-wise, Friday, we don't have trading on Friday. The market is closed. It's Good Friday. Beside that, we'll start hearing from Fed. We'll see a lot of smaller reports. Not the big reports we're not going to see this week, but this is going to end March and going to end Q1. And 2 weeks from end of this week, we are going to start with, guess what? Earnings. That brings us, of course, to earnings this week. Not a big week. We'll hear from GameStop. We'll hear from Carnival Cruise, Variant, Hot 8. Basically a dull week from that point of view. But what we will see is DWAC. DWAC is Trump's social media SPAC that is going to probably IPO this week. Trump's worth or windfall for that should be around $3 billion. The $3 billion need to be, of course, executed, meaning that he will need to sell stock. No one knows currently if he has a lockup or he doesn't have a lockup. All this in continuation to the fact that he owes $454 million for a judgment against him in the New York courts. Well, it's going to be very interesting. I wouldn't get into anything that's going on with DWAC, not because I have something for or against Donald Trump, President Trump. It's because it's going to be very, very, very volatile with a lot of people that will have to sell their stock in order to see money out of it. So you can't short it probably. And I wouldn't short it because this might be the memest stock of the world. I wouldn't be even surprised in a week from now this will be the biggest company in the world because of some kind of gamma squeeze or something like that. You can look up all these terms to better understand, but just enjoy the show, just like everything with Trump probably. And this brings us to the S&P 500. What we're seeing right now is the ETF that follows it. It's called the SPY. You can see that Thursday, another all-time high, 10% year-to-date. And if we look year-to-date at the chart, we can see that we're basically going up, correcting a bit, going up, correcting, going up, correcting. And right now, we are in some kind of slow grinding toward going up. After 2 weeks of red, now we saw a green week. We still have an open gap on the daily chart. We might close it eventually. But right now, the momentum is with the buyers. I wouldn't try to go against the momentum. And you can see that the 150-day moving average is starting curling up because it follows 150 days overall. And I didn't forget. This day, while I'm recording March 23rd. You're seeing it probably March 24th. This day, 4 years ago, was the perfect bottom. What do I mean? 4 years ago, 23rd of March, on a Monday, the S&P 500 touched, let's put on SPX so we'll have the exact numbers. The low of the day was 2191. That was March 2020. Again, the numbers 2191. We are now at 5234. What does that mean? It means that in 4 years, the Nasdaq went up 168%. The S&P went up 141%, including everything that happened in 2022. That brings us to a CAGR of 4 years of 24% for the S&P 500, a CAGR of 28% for the Nasdaq, and other markets, of course, just like the Tel Aviv market, went up as well, but not in the same pace. What does it mean for us as a long-term investors? And short-term. Let's start with long-term. Long-term investment, it means just like Warren Buffett and other investors keep saying, don't bet against the U.S. economy. Dollar cost average into it every month or every 2 weeks, whenever you get a paycheck, and you will enjoy buying every time, maybe on higher prices, then on lower prices, and then you'll enjoy the run-up. Same for if you're buying the Nasdaq as well. By the way, look at both charts. You can see that they go down together and they go up together. One is more extreme than the other. The Nasdaq is a lot more extreme. It has higher beta. For the traders, don't go against the market. A strong market is a strong market until it's not, just like it turned around in 2022. But then when it starts running, it runs and it stops only when it turns around. And we are not at that point as of yet. So yes, we're celebrating 4 years. 4 years of amazing gains. I wasn't fortunate enough to buy at the exact date. I can share you with that. The day before, I did buy a dog. That's the only purchase I did close to that. We were at the peak of the COVID, as you all remember. And if you're lucky enough, write me in the comments if you're lucky enough to buy and see these amazing gains over 4 years. 4 years, 168% for the Nasdaq, 141% on the S&P 500. Hope you enjoyed it. If you can smash that like button, that will really help expose this channel to more and more people. I'm Micha from America saying thank you. See you next week. Bye-bye.